Homebuilder is among the hardest hit stocks on Wall Street this afternoon. Yahoo Finance's Jared Blikre is here with a closer look. Jared, what are you seeing?
Well, I'm seeing a lot of red today, and this is a marked contrast from what we've seen through most of the year. And I'm going to show you some different time frames here, but you can see all of these stocks here down about 5% or more. Now, you take a look over what's happened over the last month. You can still see mainly red there, but let's just take a look at the year to date, because this has been an outsized performer in a year where we have quite a few outsized performers. You would think these are mega caps, but these are clearly not. We have Dr. Horton there, that's up 8.5%. Lennar just behind it. Toll Brothers almost twice that at 60%. Beazer Homes 116%. And the big leader here, Hovnanian Enterprises, that is up, let's see, on a year-to-date basis, that is up, there we go, 185%. And you can see it's really accelerated as of late. Now, what are the factors at play here? I'm seeing interest rates being blamed for this latest move down, and that would be blaming today's price action here. We do have the 10-year T-note yield rising, but it's not as simple as that. I went and I plotted XHB, that is the S&P Homebuilders ETF. That's this red line right here. This goes back to late 2018, so covers all the pandemic and a little more. And then in blue, I have the 30-year Treasury yield, and that is in that light purple here. And you can see XHB, the Homebuilders, they were able to advance from, let's say, the beginning of 2020 through most of 2022. Meanwhile, the 30-year Treasury yield was going up. Here it was going down. Here it's going up again. So not necessarily a big direct correlation there. However, I will say when the yield gets pretty high here and it starts getting a lot of focus, those 7% into those 7% mortgage rates in the news, when we had this top here, this local peak in late last year in the Treasury yield here, we did see stocks kind of take off after that. That was mid-October, and that was actually a low in stock. So although you would think there's some kind of inverse relationship here, there's a lot more at play when you're looking at the homes market. It's not just new homes that are being built, but also the existing ones. Is the data coming out stronger than expected, weaker than expected? It's not the absolute level of interest rate. It's also the relative and also the slope of the yield curve. So having said that, we have a little bit of a down action here today. Maybe it's a bellwether of things to come in the coming months, but certainly not reflective of the strength that we've had this year.